What's going on, guys? Welcome back to the channel. Welcome back to another video. Kind of a pretty tough day in the market today. The account is back at break even, but still managed to stay disciplined even though the trades did not play out in our favor. So I'm just doing this video right now. It's 2:23, Monday the 27th of October. I'm a bit stuffy. I don't know. I got damp in the rain a little bit earlier in the last week over the weekend, and that's the reason why I'm feeling this way. We have a hurricane right now, so I don't know. Might be I lose power by the end of the day into tomorrow, so I might not be able to take any trades for the rest of the week. But let us see. Once I have power and everything, then I will be here on these markets. So let's get right into it. So starting out today on the higher time frame, looking here, minimize this. So starting here on the higher time frame, we had a significant gap up on the markets, gap up from over the weekend. So last night we opened up here with at least a 300 and something point gap, and we've been just grinding higher on the Nasdaq. So it's just crazy how after selling off all of this and we finally managed to break above the highs, created an all-time high on Friday. We didn't even come back for a retest here, we just went straight up. So now we have this big new week opening gap left right here. So so I wasn't really looking to take any trades on the NQ, maybe a few scalps, but still I still took some trades. Um this market is determined to go higher. We kind of went higher because some sort of a trade agreement is on the way between America and China, and that caused us to really just run for the hills. So gapped up on the Nasdaq, and S&P is the same thing. Gap up, refresh this. And US 30 is the same thing, bit of a gap up, but not able to break higher just yet. So that is where we are on US 30. On gold, we had a gap down here. We traded back up to the the gap, pretty much close it, and then we've been selling off since today. Going down to the lower time frame now, going into the trees that I took. So let me start with gold first. I took some buy opportunities on gold, thinking that we would have came back up to close the gap, or maybe just like, well, I wouldn't have held the trade that long, but that was my idea. So we had came down and ran the previous daily low, which was right around here over the Asian to London session, and I entered on this candle right here. So this candle right here is a trade that I took. Was expecting some further continuations, maybe back up into these levels here, but did not get that kind of follow through, and I got stopped out on the trade. So let me go to trading view and show you. So I took the trade inside this macro here. This thing. So inside this macro here, I need to change this color now. This. Alright, so this trade I took inside the macro. So Going into today, I didn't wake up for a London session. So we came down and we ran the London lows and the open of New York here. And we again did a sweep here. So these macros been selling, breaking down, sideways breaking down. So we've been, coming down nicely. I saw that the previous daily low had been run, and that was the reason why I was thinking that we would probably try to break back higher. But the higher time frame was still showing me sell. So my idea was after we ran the previous daily low, which was all the way up here, we would at least go back up to maybe the midnight open up here. So we had an inversion here in this macro. I didn't quite trust the idea down here. So I saw this spike up, and when we retested this other block here, I entered over on this side. I risked like one 0.5% on the trade here. Entered, went into profit here, came back down to break even. My stops were below here. When it came back here, I added into the trade and we came up, ran these highs. Was still thinking that we would go higher. We came back down for a retest and then we came back here, created these equal highs. So I was thinking maybe we come back down, test this other block or breaker block, and then we would continue higher. You know, continue higher. But that didn't end up playing out. I could have taken out the trade at break even. I probably should have went break even right around after we went here. I was up 0.75%, but I'm trying to practice to go break even after a 1 to 1.5 at least. So I wanted to give us a push, like a nice close above these highs before I had taken a or partial or taken the stop to break even. So as soon as New York Open came, the market came back down here and I added into the trade, added here. It went back up, consolidated. I think I added somewhere around here. I got stopped out and I think I added somewhere here. I will show the executions on the on the on the MT5. But no follow through. I was thinking this was just a deep liquidity grab back down into here and then we would have continued higher. That wasn't the case. So I got stopped out and I just left that for the day. I could have managed this trade better, as well as I could have flipped my bias and went bearish. Looking back at it now, after we broke down right at 9:30, NYSE open here, we came back up into this, and I could have gotten an entry inside the 950 to 1010 macro, but we were already in discounted prices on my chart based on my understanding. So I didn't want to really sell here. And this big box is, I think it's a daily order block that we were sitting inside. All of this box right here is a daily order block that we're sitting inside of. So we sold all the way down in the AM and then consolidated a bit right around. This would be 1050 to 1110, still selling off. And then we had a bit of a retracement here. This could have been an entry again for a long scalp to go higher, but I did not take any more trades on it. Seems like we're going lower because on the higher time frame, it's clear now that we're going lower on the higher time frame because the 4 hour candle had already closed, so I was expecting that's why I was expecting that much of a follow through. So we broke structure on the 4 hour now clearly from here, and we might just get some pull down into here because the trade negotiations are underway, and I think maybe they might come to an agreement. So, as you know, fundamentally, gold is a safe haven asset. So, if that's the case, then it's going to come all the way down before we get any type of snapback, unless something else happen that will be the case. So, I might leave gold for a little while. Going over now to the Nasdaq. Let me use this one. So like I said, gapped up, going down to the lower time frame. So my idea was, because I didn't take any trades during the Asian or the London session, even though there were opportunities. I think maybe those were the better opportunities to get in as low as possible. But I was thinking that we would have came down to fill the gap here. So that's why I didn't try to take any trades now. And I wasn't feeling 200. So I didn't bother to wake up to try to take any trades. So like I said, we had this big gap up here. This big gap up here over the weekend. And we just went higher. We traded down into it a little bit here, and then that is about it. So looking at the price action, during London, it came as close to here as the daily open, the true daily open, and this macro could have gave us a buy, or this one right around here. I will just continue going up and up and up for the rest of the day. During New York, we spike back down into this zone right around here. This this order block. So we took out this liquidity right here. Took out the liquidity below these lows. Tapped into here. And as soon as New York opened, I wasn't looking. I was trying to manage the gold trade, so I didn't try to take any trades during the 950 to 1010 macro. It was a bit choppy, like I said, like it was going back and forth. So I wasn't sure if it would have sold or would have bought. So I wasn't going to force anything. So I took a sell. I think I took a sell on it, and then I just got out somewhere inside of here, and then it came back up, stopped me out. I decided to go long instead, because I had the range high here, discount around here, and discount down here, and equilibrium right around here. That was what I was seeing. I possibly shouldn't have flipped my bias. I would have probably gotten an entry down here, retesting these lows. But I thought we were going to sell off, so I was expecting us to pull a little bit more down into here before continuing higher. So not the cleanest price action. So that was the case. So the trade that I took is here. Once the 15-minute candle had flipped back bullish, I took an entry here, thinking we would come higher and probably continue like this. I was risking 0.5%, but I went break even once we broke out to here, because my stops were somewhere down here. I didn't even look at the macro during this time, but we came down during this macro, respected this 5 minute fair value gap, respected this 5 minute fair value gap, and then we just went up from there. So when we came down in this 5 minute fair value gap, that's when we went up like this, and now we're grinding higher. My TP was somewhere up here, so the original TP would have been hit if I hadn't gone to break even. But I didn't trust it at all time highs because I'm thinking at any point in time we could come down and maybe try to fill the gap, or we could sell off and then continue higher. So we were already in premium price, so that is the reason why I didn't really fully trust the buy. So I only risk like 0.5% on the trade, and yeah, I got stopped for break even before it made its way higher. So let me show you. Oh, so these are the executions on gold. So the first two inside the macro, I entered here, and then when it went up, came back down, I added there, and confirmation my stops were all the way down here. Probably should have taken off the trade because I was up around $70 right around there, but that wasn't the objective. Even though we came up and ran these highs, and we couldn't possibly um, close above this fair value gap. We hit it at 50%. So I possibly should have just went break even and just left it. I got stopped out on this down here. I added here and here when the market came up, which I possibly shouldn't have done, but it was at break even, so I just decided to add, and then I got stopped out here. I lost like 1 point something percent on that, and yeah, and yes, so this is how it looks on the 5 minute. So no follow through. Like I said, I possibly could have flipped my bias and went short, but I was looking for buys because I'm thinking we are in discount, and I saw that we had did this sweep. So I was thinking that because we kind of did that change of character there, we could go higher. So that was what happened on gold and the Nasdaq. This was the execution. I think I took a sell here, got stopped. I think I took it off here because when we were breaking down, I saw we had run this high. So I was thinking we would come back down to here. So I took off. I took it off somewhere here because my stop was all the way up here using the 15-minute chart, risking like what 0.5%. I just took it off right around here, and then I took the buys here once it started to break out, and I went break even when we went up here. I will pull back here and start on that stop down. The original TP would have been all the way up here. I think somewhere up here or up here. So it would have been hit higher than I not gone break even. But nevertheless, I think I did what I did to protect my account. That's the aim of the game. And that's how we ended today. So like I said, the account is sitting at around like 995. So these are the trades. So these are the trades from today. This one, this one, this one, this one, and this one. So yeah, all of these were from today. I decided to just call it a day today. So that is it for today's video. Going into tomorrow, like I said, if I have internet or electricity, then I'll be looking at the markets. Until the next one, guys. Peace.